good afternoon, good evening. In this video, I'm going to show you a 100% mechanical system that you can implement for longer term swing trading strategies, right? Now, this will be using ICT concepts, CRT, and essentially just risk management, okay? So, the first step is to jump on the monthly chart, right? So if I pull up any, let's say any FX pairs, doesn't matter what it is, EU, GU, AU, whatever it is, it does not matter. Okay, so let's just pull up any where I can see a rejection block. Let's do it in the last, I don't know, 3 months. So obviously we do have one here. You can see. So I could use this. So should I do it? Okay, I'll use this actually. So just to clarify, what is a rejection block? Well, a rejection block is when the open of this candle, so candle A or this candle, is the same as the close price of the previous candle, right? Now, why is it a rejection block? Is because you need to think of it like how it's forming. So, price, imagine in a lower time frame, is forming, is hits a level, rejects off it, forming a wick here, as you could imagine, and then it just goes higher from the open price, or may wick it and then continue to go higher from the open price, right? So it's rejecting at this level here. And usually when that occurs, you can see that the next candle goes in line with the bias or in that direction. In terms of reversal, it's literally rejecting. So you can see any example here: rejection block, next candle bearish, rejection block, next candle bullish, rejection block, next candle bearish, right? Here you have rejection block, and here maybe fails one, 2 times, but that's about it. Now, in this instance, as you know, we have got rejection block, so I would assume for the month of June in 2024 that I'll be bullish. So let's say, hypothetically speaking, this is what I see. And to add some drawings to the sheet, I'll draw the rejection block low, the open price or close price, swing low, and any potential targets. So that is enough drawings that I would need. Okay, now to get an entry, because we know the direction that it's going in now. Okay, so we know that the monthly is bullish purely because we've seen a rejection block, right? Like this. Knowing that, if I just draw the range, just so you can see this, I know for this whole month I am going to be bullish. I want to be a buyer. Okay, now to make it 100% mechanical, what I'm going to do is wait for a rejection block to form that's bullish on the day chart. Okay, so let's see and wait. Okay, so now here you could say this is a rejection block, but I don't like it because it's not formed in liquidity, so I don't like it. That's exactly why I need it to hit something, then form a rejection block. So for example, can you see how this is taking a low and it's formed a rejection block? So I'd be a buyer with my stop loss here and a few pips. So let's say here, you'll end up looking like this. Now the entry criteria or process for this would be, you find a daily rejection block and you can just buy at the open price. And you put your SL few pips below the low of whatever it is. Targeting at least here as your first TP, then here as your second TP. It's up to you where you want to take your TP, right? So as you can see, there you go. Now if you do the same thing again, rejection block, right? So I'll be entering at the open price of the next candle. Stop loss will be below the low plus few pips, so let's say here. Targeting the next level, so this high. And you see you got stopped out, that's fine. We go again. We wait for a rejection block again. Now buy again, targeting this high. So it will be something stupid like that. So I'll probably let it run a little bit higher because I don't want less than 1R. And there we go. Now, as you can see, this is a very, very mechanical system, and it does work quite well. Okay. Usually, if the monthly level is not hit, we know that we can hold it. We know we still have bullish bias till there. So now the rejection block, we can buy. There you go. I saw below the low. Literally on the daily chart. That's all you need. Sometimes even you can even buy here before it turns. But that's risky. You get the idea, right? As soon as it hits the level, it reverses. So that's obviously one example in GU. Let's see how many examples we can find, right? Let's find the most obscure currency pair that we can look at. Well, let's do, I like to see some with, I don't really like gaps. Let's do GJ. I know that's traded a lot. So, jumping on the monthly chart, I would do this month, purely because obviously rejection block bearish, his bearish scenario. We've got 6 days left, that's why I'm a bit iffy. So let's still look at it. So as you know, bearish bias. Bearish bias. Now in the day chart, all I have to do for the month of August is look for a rejection block to form. That's bearish. I do not need to spend time watching the charts, doing anything crazy, anything like that. All I have to do is wait for a rejection block. On the day chart, enter at the open price, stop loss. It won't be here, it'll be a few pips. Maybe, I don't know how many pips is exactly how you want it, but it'll be like that. And I'll target the lows, maybe even this low to start with, but we'll see. So let's say I sell. Now we get stopped out, that's fine, we go again. Because the way you have to imagine it is, this gets you in line with the monthly chart, and you're assuming that it's going to drop from here. We don't know. So selling again, stop loss, let's say here. And then you can take out any lows, so even here, wherever you want. Oh, perfect. This is why I didn't want to see it, because it's not finished. But let's let's go through more examples so you can see it. Let's do USD-CHF. It's not a bad idea, USD-CHF. Right. If I go, here we go, rejection block formed. So we know that we're bearish. This is a bearish example, bearish scenario. So in this instance, I'll be bearish. Day chart. Very, very simple, very simple. All I'm doing is looking for bearish rejection block, right? So this, you could trade this. The only annoying thing is it's not formed in liquidity, so it's reduced risk. I would probably risk 0.25 or 0.5% of risk whatever I'm having. and that's why, right? So the best trade would be when there's a rejection block in liquidity. So like for example here, right, this has taken this fair value gap and is basically rejecting off it, and we sell with the SL probably above here purely because it's fair value gap. And do we get the target, which is this low? There you go. Let's see if we get another rejection block in the month of June. Yep, but you can see it's not in liquidity. That's why it's not the best, and that's exactly why. Here, is it in liquidity? The answer is no. So I wouldn't take this. Even if it does tank, it doesn't matter. Here, this is fair value gap, short. Yep, I would have shorted that, targeting this low, and it would have been hit in one candle. You get the idea. So just clarify how you do this. 1. Step 1. Look for monthly rejection block. This gives you your bias. 2. Look for a daily rejection block in line with bias, monthly bias. 3. Enter at open price for the next from the next candle, next daily candle, with stop loss below the low if you're bullish, plus let's say 20 pips or 15 pips, 10 to 20 pips if you're bullish, vice versa if you're bearish. Four, target daily swing highs and lows. So if I was bullish, I'll target swing highs. If I was bearish, I'll target swing lows. That is it, right? This is a very, very mechanical system, and it works quite well. Hopefully you guys understand this and use it to your advantage to help you sort of retire, because realistically this will beat S&P. This will beat any sort of long-term gains or long-term capital sort of investment that you have, purely because you're utilizing turning points of the market in a quite efficient way. Hope this video helps.